What's up everybody, Gen X Dividend Investor here. In this revealing video I tell you about the first Dividend Kings ETF I've ever seen, which is the Roundhill S&P Dividend Monarchs ETF, ticker KNGS, which should have started trading on November 2nd, 2023. But before I get into that, I wanted to first share that one cool thing about doing social media stuff is that people tell me lots of fascinating things about dividend related topics. Like yesterday I got this comment from TVR Dude, who said that he retired early at 59 and is now living off dividends, like I am. And then literally as I'm working on this video, I got a notification from a subscriber named Vincent who said, I receive $100,000 annually in dividends, which I reinvest in the same Vanguard index funds. I hope that in 10 years that my children and I could live on the dividends alone if I wish to. My plan is to pass it on to my children. I don't even pay attention to what the stock market is doing. Comments like theirs are awesome because they all give you proof that living on dividends, whether fully or partially, is possible. The ironic part is that yesterday I got a different comment from someone who was spamming my comment section, telling people over and over how you can't retire on dividends, and he included a link to a video of a YouTuber who isn't a fan of dividends. I don't know if he was just a fan of that other YouTuber, or if it was them posting under a hider account, or if he just didn't like dividends. But I found it funny that he's telling me it's impossible to do something that people all over the world have done. I don't have any problem if someone has a different perspective than me as long as they talk in a reasonable way without being toxic, but what I don't allow are people who spam the same comment over and over in my videos like he was doing. Anyway, beyond subscriber comments, I also constantly get emails about dividend stuff, and yesterday I got this email from someone named Will Hershey from a company called Roundhill Investments. I'd never heard of Roundhill before, so I checked out their website and saw that Will was the founder and CEO of it. Will's email said, Hi Gen X, we came across your channel and appreciate your focus on dividend investing. We are launching the first ever Dividend Monarchs ETF on the NYSE this week, which will invest in US companies with 50 plus consecutive years of dividend increases. The Roundhill S&P Dividend Monarchs ETF, ticker KNGS, will track S&P's newly launched Dividend Monarchs Index. So I thought that it was neat that he reached out and told me about a new ETF that was going live, and one that I'd be potentially interested in. Oh, and I need to make a big disclaimer, which is that I'm not affiliated with Roundhill or Will in any way, and they're a small company, so I'm personally not going to be investing right now, and I'd caution anyone investing to always do their own due diligence. And I'll say that there's always risks with any investments, and things with no track record you gotta be even more careful with. That being said, I've always wondered why there isn't an ETF focused on Dividend Kings like there is for Dividend Aristocrats, so I think that it's really cool that they started one. I mean, most dividend investors know about Noble, the Dividend Aristocrat ETF, but where's the Dividend King one? I put a question mark in my title because I think that Roundhill has created the first Dividend Kings ETF, but I wasn't 100% sure. However, Motley Fool has a recent article that said that there aren't any ETFs that focus on Dividend Kings. And then I found this Time.com article that came out a few days ago that also said that there's no ETF dedicated to Dividend Kings, only Dividend Aristocrats. And finally I found this USA Today article that came out today, which also says that there's no Dividend King ETFs. I did find a Korean ETF called KB Star US Dividend Kings, but I didn't dig into it. Now, why should we care about Dividend Kings? Well, steady dividend-paying companies tend to be well-established, consistently profitable companies, and no companies exemplify that more than the Dividend Kings, as they have often flourished and increased their dividends for at least 50 consecutive years. That means they have paid out and raised their dividend through 7 recessions, an oil embargo in the 70s, double-digit interest rates in the 80s, the stock market Black Monday crash in the 80s, the dot-com bubble crash in 2000, the 2008 financial crisis, the recent pandemic crash, multiple wars, etc. The Times article said that Dividend Kings delivered an annual average return of 9.62% from 1972 to 2018 versus a 2.4% return for non-dividend paying stocks. At the same time, the equal-weighted S&P 500 index delivered an average return of 7.3%. So while no investment is guaranteed, and even Dividend Kings can deliver terrible returns and can go bankrupt, the whole basket of them has tended to do quite well over the long run. And while this new ETF doesn't hold all of them, it still has the potential of becoming quite popular over time, I bet. And here are the current holdings of KNGS as of November 1st. So it has around 30 tickers in it, and I think this is sorted by highest yield and weighting, down to lowest. The top positions in it right now are LEG, 3M, Federal Realty Trust, Black Hills Corp, Stanley Black & Decker, etc. And I have a bunch of the stocks in the ETF including Kimberly-Clark, AbbVie, Coca-Cola, Pepsi, J&J, Colgate-Palmolive, and Procter & Gamble. Note, one thing I noticed when I started researching Kings was that there was another company called Upholdings Investments, which had the Kings ticker for a while, but then they went inactive and then Roundhill snagged it. I looked into that old Upholdings Kings ETF, and it apparently was the first hedge fund in the US to convert into an ETF, so they seemingly weren't even focused on dividend stocks. I then found an article talking about Upholding which said, after careful consideration of a number of factors, including its inability to attract sufficient investment assets, the board concluded that it is advisable and in the best interest of the fund and its shareholders to liquidate the fund. Any shareholders still holding shares of the fund at liquidation will receive a cash distribution equal to the net asset value of their shares. So it sounds like that ETF eventually died due to lack of demand, but at least shareholders weren't left empty-handed. And this is an example of what can sometimes happen if you invest in a new ETF. That doesn't mean that will happen with the new Kings ETF, and I'm not trying to dissuade you from investing, I'm just trying to paint a broad picture of possibilities. I personally think a Dividend Kings ETF has a good chance to grow in popularity and flourish, but I obviously don't know for sure. Anyway, so how did this new ETF come about? Well, S&P Global, aka the guys who created the methodology behind the Dividend Aristocrats, decided to create a new Dividend Kings Index in April of this year, and they called this new index the Dividend Monarchs, and designed it to track long-standing companies in the US market that have consecutively increased the dividends for at least 50 years, along with some other requirements. The reason that S&P did that was because in 2023, there were finally enough companies that raised their dividend for 50 plus years and met their other requirements, so they felt they were finally able to create a robust index. They narrowed the various tickers down to 25-ish that hold, looking at ones with the best dividend growth histories and such, pulling from the S&P Composite 1500 index. So a reason Will and Roundhill made their new Kings ETF was because S&P Global finally came out with what was effectively a Dividend Kings index. I'm guessing S&P named it the Monarch Index simply because they don't hold all the Dividend Kings per their methodology. They mandate that all companies have a market cap of at least $2 billion or more and have decent liquidity, along with some other nuances that are kind of similar to their Dividend Aristocrats methodology. After looking at SPGI's methodology document, I then looked at Roundhill's Prospectus document that they filed with the SEC. Note, the Prospectus document says, the information in this prospectus is not complete and may be changed, probably because it's so hot off the presses. Now, one thing people always ask about new ETFs is the expense ratio, and Kings has a relatively low one at 35 basis points, which is 0.35%, which is like a $35 a year drag on a 10 grand portfolio. I say relatively low because something like VTI is very low at 0.03% or 3 basis points, and something like Devo, which is actively managed, has a higher one at 0.55%. Noble is probably the best comparison ETF to Kings, and Noble is also at 0.35%, so I think what Roundhill is charging seems reasonable. Will told me that they're seeding the fund at a NAV of around $25, so they'd expect it to start trading around that amount, assuming there aren't any major moves in the underlying components overnight. And when you're watching this, it might have moved a bit from there. Will's guess is that the yield will be around 3.5% initially, though that can obviously change over time. They plan to pay out Kings quarterly, starting with the first payout in December of this year. I asked Will if he had considered paying monthly or even weekly instead of quarterly, and he said they went quarterly because that's the cadence that the underlying holdings pay out. He said they are working on some funds that would pay out something other than quarterly, and he asked me if I thought weekly would be overkill or if investors would actually like it, and I told him that I thought investors would love it. So it'll be fun to watch their ETFs to see how things evolve. My vote would be to try to take this new Kings ETF and pay it weekly, if possible, and even though it shouldn't matter, I know it does matter psychologically for folks, not to mention people like the idea of a tad faster compounding. They currently hold a REIT in it, but no MLPs, so I think that means they'll have to publish documentation that many other ETFs do regarding what percentage of their distributions come from a qualified source versus non-qualified. So if you hold it in a taxable account, then some distributions will probably be taxed as ordinary income, some as qualified dividend income, and or some as capital gains, unless you're in a retirement account, in which case I don't think it'll matter. But I'm not a tax guy, so do your own due diligence to verify. Roundhill has a few other ETFs they run, some with funny ticker names, including Chat, which is a generative AI and technology ETF, probably named after ChatGPT, and BETZ Bets, which is a sports betting and iGaming ETF, and Nerd, which is a video games ETF, amongst others. Anyway, another concern I have beyond investing in super new ETFs is about low trading volumes and low assets under management. Like one of Roundhill's ETFs with the most AUM is ticker METV, which is their metaverse ETF, and it has around $400 million under management, which is still pretty small in comparison to more established ETFs. Devo has $3 billion under management, Jeppy has $30 billion under management, SCHD has $45 billion, and Big Boy VTI has $300 billion under management. But hey, you gotta start somewhere. A fund with a large AUM signifies higher participation from investors, and a fund with low AUM signifies lower interest in that fund. That being said, a fund with a large AUM might not be the best choice always, as there could be funds with lower assets under management, but with better track records and risk-return metrics. Okay, and looking at their Metaverse ETF, its one-year stock return looks great at 42%, doing almost 3x of what the S&P 500 did in the same time frame. But its 2-year performance, which is about how long it's been around for, is looking crappy as it's down almost 34%, which is a lot more than the S&P 500, which is flat. Of course, a couple of years is too short to conclude too much, and I'd guess that its price is being ruled by supply and demand, pushing it from its net asset value. I found an article that said that Roundhill manages around $608 million across 12 ETFs, and they also just filed to launch a crypto fund that takes a page from the playbook of JEPI. Roundhill is looking to issue the Roundhill Bitcoin Covered Call Strategy ETF, which would offer investors exposure to the largest cryptocurrency by utilizing a covered call strategy as investor demand for Bitcoin funds rises. The ETF will utilize a synthetic covered call strategy, which works by purchasing and selling a mix of call and put options contracts that utilize Bitcoin futures ETFs as the reference asset per the prospectus. So given Bitcoin is so volatile, it seems like using Bitcoin for a covered call strategy makes sense if income is your main goal. But while the potential for more income is there's also potential for big losses if Bitcoin goes down. So I think that means kind of not all the upside potential of Bitcoin combined with downside potential, and yes, more income. So as always, be very careful with anything you do. It depends on your goals and needs and such. Anyway, the bottom line point is that I'm just touching on a few quick things in this video. Kings is definitely going to be a ticker I'm going to watch, because I can imagine that over time it could become quite popular. I don't plan on investing right now, but if the ETF is doing well after a few years, then I'll become more and more interested. But you guys know that I'm pretty risk averse, and I like things proven out more before I get on board. That means I can miss out on getting in early, but I'm okay with that. Like, I think Vici looks like a solid REIT, but I'd like to see it prove its worth more before I jump in. I'm also retired, so you guys gotta do what's best for you. If you are seriously interested in Kings, then I'd read through the prospectus carefully, which calls out a slew of risks that you should be aware of, and I'll dig into the company more, the managers more, etc. I literally just found out about this new ETF in the last 24 hours, and I changed the video I was working on so I could jump on this. Thus, I've not done nearly enough due diligence, and instead my goal here was to simply share some exciting news with the community, not influence you to invest. But again, never invest without doing your own due diligence, and I can't guarantee that everything I've told you is accurate, nor do I know what the future may yield. Please leave me a comment if you find any mistakes I've made, and I'll update my pinned comment and or description of this video, so always check both of those places once my video goes live. Oh, and I purposefully switched things up, and in the beginning of this video, I didn't ask people to hit the thumbs up button, subscribe if they haven't yet, and click that bell notification. So please do that now. I'm going to compare the metrics on this video versus my normal ones, where I ask people to thumbs up both at the beginning and at the end, and then I'll do whatever yields the best results. And please leave me a comment telling me your thoughts about this new ETF, as I'm really intrigued in what people think. I'm a geek about this kind of stuff, and one thing I'm really excited to do is to start reading the articles on Seeking Alpha about this new KNGS ETF. As most of you know, I'd literally never buy or sell a stock without first reading what Seeking Alpha has on it, not because I agree with everything on there, but instead because I often get exposed to new insights and learnings about tickers, both from authors and just random people. Obviously some things are more biased than others, and sometimes there's mistakes, but I still find Seeking Alpha to be one of the best forums for broad stock related info on the net. Seeking Alpha sponsors me these days, but I paid for their premium membership before they ever reach out to sponsor me, because I value their service so much. Thus, I encourage you to sign up to them using my affiliate link in the description of this video, as using it often comes with benefits for new member signups. And I highly recommend that you join my free Dividend Discord chat server, which has over 11,000 dividend investors on it from 76 countries around the world. Thanks for watching, stay positive, and I'll talk to you again real soon. Remember, I'm not a financial advisor, and my videos are for entertainment and inspirational purposes only. Investing of any kind involves risk. I'm only sharing my opinions with no guarantee of gains or losses on investments.